is it a factor? Yes. Can we use a structure to avoid it? We will. But it absolutely should not determine your choice between two different properties.
Take us through like the land tax, and then off the back of that, we'll then talk about structures, which is how to get smart and intelligent about what type of properties you're buying in structures.
Well, yeah, when we say tax is a success fee, it doesn't mean we just slap you with a tax return or a land tax bill and go, haha, you won. Obviously, if we can avoid land tax, we want to avoid it. But the thing you got to remember is land tax is tax deductible. Secondly, it's unavoidable at some point anyway. If you're in the property market, you obviously think the property market is going up and they will go over thresholds. What's one of the easiest ways for the governments to refill those coffers? Rich property investors. So when we look at our structures and we effectively try and determine what's going to minimise it, I always put it as the least important factor. If you've got a cracking property in Queensland and one that's okay in WA, like the land tax is probably a couple of grand a year. The equity uplift from the cracking property versus the average one in WA where you avoid land tax, it just doesn't make sense. So if you're looking to avoid it, then in 3 years you go over anyway, and you own the property for 20 more years, well, what have you just done? So is it a factor? Yes. Can we use a structure to avoid it? We will. But it absolutely should not determine your choice between two different properties. Bottom of the queue for me.